Hey, what's going on, team? It's Ricky with Tacbot Solutions, and let's get to breaking down a couple of these different stocks. So I asked our Discord group to post their number one oversold stock, meaning their number one cheap stock that is a little bit more on the undervalued side. And we got a couple of different people sharing their ideas. So I'm going to be breaking all of these down within this video. Again, friendly reminder, my goal within this video is for you not to see value in all of them, of course, right? Because we all have different criterias. Every stock has to meet. But for you to cherry pick the ones that you actually see value and add them to your watch list, set effective alerts, and just follow up with them when it is that when the opportunity presents itself. So let's go ahead and get started. And again, if you guys want to join our free Facebook group and our free Discord group, the first link in the description will send you on over to our free Facebook group. We have over 313,000 members, and this will gain you access to our free Discord group as well. So let's go ahead and get started. The first one that we're going to break down is SLV. I've already broken this one down. I just wanted to run through a couple of them just to have a better understanding of what it is that I'm looking at. On the 4-hour time frame, you can see that now it's trading below the overall SMA line, but on the day chart, you can see that it looks a little bit different. It used to show signs of it being a little bit more on the bullish side, with a very common resistance level at $26.50 and very common support level right around $22. So as of right now, we are now pulling on back a little bit more on the oversold side. I see what it is that you're paying attention to, but again, it's been making these lower highs and lower lows, so let's make sure that we allow that opportunity to present itself. If it's now trading above EMA and it heads to the SMA line, I wouldn't be afraid to lock in profits up here, as it tends to get rejected by the SMA line. But ultimately, to get back to these levels, I'd like to see SLV begin to trade above the SMA line on the 4-hour time frame, giving us a better understanding of its overall direction. The next one is going to be GLD. So GLD, as you guys can see on the 4-hour time frame, has a very similar pattern. It used to be bullish, right, hitting highs of 179, and now it pulled on back, getting rejected by the overall SMA line. If GLD were to make a full recovery, offers a little bit over 7%, so nothing crazy. And again, it just recently came from lows of 160. So make sure you take that into consideration. And on the day chart, again, just so you can see the overall big picture, it was bullish before. Nice little pullback, common support level right around that 160 area, and then common resistance level right around that 180. So make sure you take that into consideration. The next one, if I'm not mistaken, is going to be Ttcf. So Ttcf, again, on the 4-hour time frame, looking a little bit more on the oversold side. I'm sorry, the day chart. Looking a little bit more on the oversold side. Based off previous patterns, very common support level at $15. This stock on the price per share is a little bit more affordable, but just make sure that you take that into consideration, that because it is more affordable stock, these tend to be a little bit more volatile. So you can see a very common support range right around that 1550 general area, and very common resistance range right around $23 to $27. So easy to understand the lows, the highs, the lows, the highs, the lows, let it find a support level, and then we can sell right back at the highs. So I appreciate you sharing that one. The next one is TKAT. So let's go ahead and break that one down. So this one's a little bit different. Not necessarily my cup of tea, to say the least. Looks like a pump and dump. Pushed up to highs of $74, and it's been selling off ever since. Been getting rejected by the EMA line, making lower lows, lower highs. I would completely stay away from this. You can set alerts if an actual reversal begins to happen, but as you guys can see, for the past couple of months, all it's been doing is bleeding, and I would hate to put my money in anything that is selling off over time. The next one is going to be Sofi. Excuse me. So Sofi, based off of this day chart, you can see that it has a very common support level at 1470, 1450, around that general support range, and a very common resistance level right around that $21 to around $24. So definitely has recovery potential, to say the least, right? And huge recovery potential. But as of right now, it's pulling on back. It's more bearish than it is bullish. We first need to validate this as a support. And then as you guys can see, I set my alert here. It has so much margin for recovery that there's no reason to rush into it, right? We can set our alert for the break above EMA, and I'd love the opportunity, to allow it to present itself versus trying to force that entry. So just make sure you take that into consideration. And of course, let's set an alert for the break below the support on this Webull platform. So let's go ahead and move on to the next one. This one's going to be BTBT. So we have that one right on over here. Looks a little bit more on the overbought side. Again, tends to be more bearish than it is bullish, meaning that it tends to sell off more consistently over time. But from time to time, it does pump up. It just doesn't hold very well at these overbought levels. It pushes and then pulls right on back. And this is super important to understand the characteristic of a stock, right? Because if a stock, pushes up within a very short period of time, but drops for a much longer period of time, then at least you can better understand your intention with it. Okay, this might be a day trade, but definitely not something that I want to hold over time as it tends to bleed. So instead of trying to buy it now as it's potentially pulling on back, then maybe waiting for an overall reversal, day trading it when it pumps up, and then knowing that locking in profits is in your best interest. So we can definitely follow up with that one, but it looks a little bit more on the riskier side with that. Let's go ahead and move on to the next one. So we were just on BT. The next one's going to be Bngo. So let's see if we have that one here. So Bngo, here we go. 4-hour, 1-day chart. We could see that it hit highs of $15, pulling on back to the SMA line. SMA line tends to be a very common support range, but as you guys can see, it's really testing that SMA line. It's at a critical point is what I like to call it. To keep it super simple, why would I want to put my money in something that's potentially about to crash, right? Definitely not, right? So let's go ahead and set our alerts, and if the opportunity does present itself and the direction ends up being in our favor, then I'll get alerted. I set an alert for the break above this like 620, above $6, anything to at least indicate signs of a reversal. It only makes sense to put your money in something when it's actually indicating signs of an uptrend, especially when something's bleeding and at a potential support range where it could potentially break below. So let's make sure we take that into consideration. Let's move on to the next one, Ttcf. So we did have that one. Oh, I think we already broke that one down already, right? So a little bit more on the oversold side. Overbought levels around $24. So just make sure you take that into consideration. Definitely more bearish than it is bullish as of right now. So let's move on. We got Bngo once again. We got Gatu. So here we go. 4-hour time frame, bleeding over time. This isn't my cup of tea. I don't like lower cap stocks that are below $5. I don't like stocks that bleed over time, getting rejected by the EMA line. If this meets your criteria for random pumps, then great, all power to you. At least we're talking about it, but at the end of the day, this definitely just is viewed as a greater form of risk, and I want to explain to you why. Obviously, because it's bleeding over time, its overall direction is not in your favor, and when it does push, it pushes within a very short period of time, and then it crashes for a much longer period of time. So the direction is not in our favor, and over time, it looks like it's just pretty much just decaying in price. So definitely not something that I want to partake in. The next one is going to be TAL. So TAL, let's go ahead and break that one down. All right, so TAL, a little bit more, definitely more on the oversold side. It looks like it's been bleeding ever since, what is that, March of 2021. So one of the things that I love to ask any member that ever presents a stock like this is, what makes it a buy now than versus, where it was last month or the month before that or the month before that? Like, why wasn't 3 months ago a good buy? And now look at it where it's at, right? The idea is, again, to put your money in areas that are indicating signs of growth, not where you hope that there are signs of growth. So what can we do? We can set effective alerts, right? We can set an alert for the break above a certain price point, and it doesn't matter if you miss out on a small percentage because of a random pump, right? You're not here to get lucky. You're here to set your future self up for success. And the best way to do so is making sure that wherever you put your money, that it meets your criteria, right? That you have some form of risk management, so you mitigate risk, and it's all calculated risk at that point, right? It's not that it becomes any easier or that it becomes any just less risky in that aspect. It's just you are being more selective on what it is and where it is that you're choosing to take advantage of, which I think is super important. So instead of trying to nickel and dime a stock on, trying to buy at the lowest price point, why not just stay effective and partake in a stock when the actual, reversal and action is happening? Those are my 2 cents on that one. The next one is going to be SPCE. We've broken this one down many times. SPCE has been pulling on back after its overall launch, right? There is news that their executives ended up selling a couple of their shares. This caused, again, a lot of selling pressure. SPCE, which is Virgin Galactic, has been selling off ever since. This is a stock that I've personally been paying attention to. Is it a stock that I would recommend for everyone? Definitely not. Right now, it's more bearish than it is bullish. It's not indicating any signs of a reversal. Yes, it does show signs of a potential recovery, and the recovery is, quite attractive. You can see it's a little bit over 100%, but that doesn't matter, right? Because it's at $25. In a couple of weeks, it could be at $14. So instead of rushing to buy the dip, why not just buy when it makes sense, right? If you want to buy the dip, then just make sure that you do it with a position size in which you can tolerate. And what I mean by that is if you buy, let's say, 5 or 10% of whatever it is that you initially plan to, invest in. So if you plan to go in with, $1,000 fully invested, right? Then maybe going in with $50 or $100 is something that is more feasible, because if it continues to pull on back, you're at least able to tolerate that pullback and manage your risk a little bit more effectively. So again, always prepared for the worst, and not here just to expect the best, right? So I already have my alert for the indication of any signs of a reversal, and until then, I'm not super eager to get into it. I do find SPCE very attractive just based off of its previous reversals, but again, it's keeping it simple. So once that reversal ends up happening, I'd love to ride SPCE all the way back up to $57, $50, but it's when that direction is in our favor. So let's move on to the next one, OTRK. Got OTRK. Let's go ahead and break this down. A lot of consolidation, super low volume, and it's selling off more than it's pushing up. 3 main reasons on why I wouldn't touch this. So that one was a very, very quick one. We got BABA. BABA isn't one that we've broken down in a while. Alibaba has just been pulling on back ever since the Chinese government has just been really targeting Alibaba, and it's been making lower highs and lower lows. It's been selling off over time. It's unfortunate to see, and all we can do is wait for the opportunity to present itself. It's great that you're paying attention to these kind of stocks, but one of the things that we always love to remind you, especially our Learn Plan Profit members, is, again, whenever you're thinking about buying a stock that's selling off, ask yourself that question. What makes it a buy now than it was last month or the month before that or the month before that if it's still been selling off? There's no difference, right? So this thing can easily continue to sell off. So make sure that there's a reason behind every action that you take, and it's not just because the market is so accessible that you blindly begin to buy the dip on a stock just because you have access to it, right? Pins, which is Pinterest, a lot of consolidation. This is a previous support range. This is one that I'm personally invested in, but definitely would not recommend for everyone. This thing can still drop, past or below this previous support level of $55. You can see that that is a previous support range, that patterns tend to repeat themselves. They don't always have to. A very common resistance level is going to be around $70 to about $84. So that is a previous resistance range. So just make sure you take that into consideration. I find Pinterest attractive. It fell 20% after earnings, which is one of the main reasons that I began to pay attention to it. But again, when I decided to buy Pinterest, I didn't go all in when I bought the dip. I went in with a light enough position size that if it continues to sell off, I can manage and mitigate my risk and manage my position size. So I have a bunch of alerts on Pinterest. I'm very excited to follow up with it. It has nearly 50% upside. But again, there's no indication of a solid support level just yet or a solid indication of a reversal just yet. So let's make sure that we take that into consideration. So CCL and a couple airlines. So CCL is Carnival Cruise Line, and this thing has been pulling on back. Potential reversal, testing the SMA line for an overall reversal here. I have my alert set already. Carnival Cruise Line is one that I've been watching with the Learn Plan Profit team. Why? Well, because it recently pulled on back, right, just due to fear of COVID or that second version of COVID coming, once again. So you could see why that fear was instilled in them, but it offers a little bit over 30% for a potential recovery. But again, we are trading below the SMA line, and the SMA line has been acting as a resistance level. So make sure you take that into consideration. I'd love to buy a couple shares of CCL once this thing actually begins to indicate signs of a reversal. And I think it's the Delta variant, right? The Delta variant is like the second version or second wave of COVID is what a lot of people are saying. So let's go ahead and set our alerts here for the break above $50. So United Airlines, like many other airlines. I actually have a whole watch list that's just for airlines, and I can almost reassure you that a lot of them offer a very similar pattern and a very similar setup. They're all testing support levels. So if you have not paid attention to airlines based off previous patterns, they all offer pretty decent recovery potential, but they're not recovering right now. So it's a great area and niche to look into right now, as they're a little bit more on the cheaper side. If you see value in them, these aren't stocks that I expect to recover, next week or even next month, but over time it would definitely make sense. This is why I created a watch list just for them, because it's a niche that I find very attractive and very intriguing. So yeah, thought I'd talk about that. And of course, let's not forget to add American Airlines. Oh, definitely not that one. So looking for American Airlines, as that one's a little bit more on the oversold side. Watch for the break below the SMA line. Let's see if we find a support level here. And then again, previous resistance range right around $25 a share. So let's go ahead and move on to the next area. So we got Ttcf. Ttcf, here we go. A little bit more on the oversold side. I believe we've broken this one down already. Again, yeah, previous resistance level right around $24. So here it goes. CRBP. So CRBP. Here we go. So this one's selling off over time, descending pattern, lower lows, lower highs, and it's trading below $5. 3 reasons I would not touch that stock. So CRSR. CRSR, here we go. Selling off, no indication of an overall reversal. I've seen this one be brought up multiple times. It's is it Kozar Gaming? Yeah. So you could see that it's still being rejected by that EMA line, and I would just set my alert if the opportunity presents itself. Great. I mean, it rallies, and when it does, it's amazing. But when it sells off, it's so consistent that I just wouldn't want to partake in that. Let's see. SK. What was that? SKLZ. All right, here we go. Selling off over time based off of previous patterns, a little bit more on the oversold side. You can see that previous resistance level is right around $23, and overall high is right around $46. So just make sure you take that into consideration that, yeah, it is a little bit more on the oversold side, but definitely not something that I would try to buy the dip on, as it's more bearish than it is bullish. So make sure you take that into consideration. So let's go ahead and move on to the next one, VIAC. VIAC based off of previous patterns. Right now trading at $39 a share. So much consolidation. And this is something that I also want to make sure that I talk about. It's not just stocks that sell off over time, but stocks that are not doing much. Why would you want to have your money in something that isn't going up or isn't doing anything to make you money over time, right? Why not, instead of just having it sit in something that's consolidating, set effective alerts, not have it in that, and then once the action actually begins to happen, then that is when you can begin to partake in that activity and decide to buy when it makes sense to you. But until then, it's just not something that I would necessarily see value in or wanting to buy the dip on. So TCOM. So we got TCOM here. Here we go. Very low volume. Doesn't even look, yeah. Oh, this isn't. I was like, this thing looks like it's delisted, and it was delisted. So yeah, this one's very oversold, was previously bullish. We can set an alert for the break above $26 a share and see if any indication of a reversal ends up happening. But until now, you can see that it's been rejected for the past month, so there's no reason to jump on in as of right now. Based off of where we're at right now to previous highs, I can see why you're paying attention to it. It offers nearly 70% of an overall recovery. But again, as of right now, it just wouldn't be something that I would personally want to partake in. The next one is going to be XOM. So XOM is at all-time highs. Oh, this is ticker symbol X. My apologies. This is the Steel Corp. XOM, as of right now, a little bit more on the oversold side. Based off of previous patterns, looks like it offers a little bit over 10% of an overall recovery. It's getting rejected by the EMA line, so make sure that we wait for that overall reversal or the break above $60, where it tends to hit highs of 65. More proper indication of a reversal. It's been still holding above the SMA line, but you can see that around $55. It's a very common support range, but like we've said before, patterns tend to repeat themselves. They don't always have to, so make sure you wait for that confirmation. The next one that we have right now is Roku. Roku on the one-day chart, very oversold, hit highs of 490, testing the SMA line as a potential support level. Actually kind of like this one. So from SMA to previous resistance levels, nearly 40% recovery. So you guys know Roku, I'm sure you guys have heard of it. Recently pulled on back, and it's testing support range. So I'm going to set an alert, and if we get that reversal, I'd love to buy a couple of shares of Roku and ride that reversal and decide to lock in profits if it approaches previous highs once again. So let's go ahead and move on to the next one. We got DRNA. DRNA, here we go. So, all right, super oversold, was previously bullish, trading at $40. I would first look into what caused this stock to pull on back. But from where we're at as of right now, if it were to make an overall recovery, that would be nearly 100%. If it were to make a full recovery. But again, definitely more bearish than it is bullish. It's great that it offers that recovery potential, but if it continues to sell off, that recovery potential means absolutely nothing. So let's keep it simple. Let's not be hopeful. Let's set alerts, and if the opportunity presents itself, we can follow up with it. Let's move on to the next one. OSTK. I think that's Overstock, right? OSTK. So that is Overstock.com. Testing support level. I like this one. Based off of previous resistance range, I'm sure all of you guys could see it right around 105, 106. So from where we're at right now to previous resistance levels, nearly 40% recovery. But right now, we're testing the reversal at the SMA line, at the EMA line. So once we get proper indication of that reversal above $75, I'd love to follow up with it if that direction ends up being in our favor. So we got Twitter and SPY. So Twitter, let's go ahead and break that one down. Twitter recently pulled on back. I think that has the potential to pull back to the SMA line. It tends to be a very common support level, very common resistance range, right around $70 to $73. So again, it's not just about blindly buying the dip and hoping it makes a recovery, but making sure that the recovery potential is something worth taking advantage of. So that would be 20% if it does pull on back to the SMA line. I have my alerts set already, and I'd love to follow up with it once it begins to actually find a support and it sells off enough that we can get that proper indication of that reversal. So let's go ahead and break down SPY. SPY is the ETF that follows the S&P 500. It's the bull ETF. So this is great, obviously, when the S&P 500 and the overall markets are going up. The inverse of SPY, if I'm not mistaken, is SPXS XS, which again goes up when the overall S&P 500 market goes down. So I just want to make sure that we talk about both. SPY is great when the market's going up. SPXS is great when the market is going down because this thing tends to go up. But again, overall markets tend to be more bullish than they do bearish, so you can see why SPXS tends to sell off more over time. So take that into consideration before aggressively going into it. So BYND, let's go ahead and break that one down. BYND, this is Beyond Meat. You can see it's a little bit more on the oversold side, testing previous support levels right around 115, 116, and previous resistance levels right around 150. So if we were to test support levels and resistance levels, that's about 30%. But again, we are still not indicating signs of reversal. So all we can really do right now is set those effective alerts, add it to our watch list, and follow up with it when it makes sense. So SBUX, and I think we're going to finish up with that one. We've gone through quite a bit within this video. So let me know what you guys think. So SBUX. SBUX, again, definitely a little bit more on the oversold side. Recently reported earnings, hitting highs of 126, pulling on back. And the thing that I like about SBUX in comparison to a lot of the different stocks that we talked about today is that SBUX, as in Starbucks, tends to be more bullish than it is bearish. Right? It tends to consistently go up over time. So although it doesn't offer the greatest percentage recovery, it is so consistent that it almost doesn't matter, right? Especially if you're someone that's just getting started, maybe just, getting your feet wet with the market. Instead of trying to trade super aggressive moving stocks and buying the dip on everything, then maybe learning how to walk before you run, following up and partaking in stocks that offer very similar patterns to like Starbucks, they're consistent over time, can be something that's a little bit more up your alley. And I think a lot of you guys can agree with me that I know when I first started, all I wanted to do was to, trade or invest in the stocks that I thought I can make the greatest return, rather than being consistent. But at the end of the day, if you're not consistent with what it is that you are doing, it doesn't matter how big a green day can be. It just takes, one red day to wipe out all of your profits for the month if you don't know how to manage risk and if you don't know where to, effectively, put your money and then lock in profits. So make sure you take that into consideration. But that's really just it for today, team. I hope that you guys enjoyed this video. We've been making a number of videos within our YouTube channel of a couple different oversold stocks. A lot of you guys have been giving us positive feedback. So if you guys would like us to continue to make those videos, all you have to do is drop a thumbs up. Friendly reminder, if you guys want to join our Discord, it's absolutely for free, and our free Facebook group with over 313,000 members. That's that first link down below. If you guys want to watch me trade live every single day, I will see you at market open tomorrow. Click the second link down below, and I'll see you at the morning bell. I hope that I earned your thumbs up. Please consider subscribing and turning on those post notifications if you want to get alerted when it is that I go live. Like always, let's make sure that we end the year on a green note. Take it easy, team.